Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for the 13th of March. It's a Wednesday, another one for the bulls. No doubt about that, as we broke pretty nicely on the NASDAQ and ran right into 2820 on the S&P 500. And good afternoon to you, Patricia. Hello, Derek. Welcome, everybody. Hope you all had a great day, both in and out of the market. Certainly a bullish market right now. Now we're going to have to deal with that 2820 on the S&P, right? That's something that's going to have to be broke for this to really continue probably all that much further. Didn't win today, but we did test it, and for the most part, it seems like the bulls, to me at least, want to try to make a run at that. So taking a look at the heat map here today, I mean, just a lot of green. Everything's kind of in the upward swing at this point in time. A little bit of, selling on individual components, of course, as usually the case, right? Not always, but very, very much bullish here today, no doubt about it. On the earnings side of things, really light day going into tomorrow, but you do have Dollar General coming out before the open. Certainly one S&P 500 company coming out with earnings here tomorrow. And then, going in to tomorrow and after the close and Friday, we'll have a couple more S&P companies. We'll take a peek at them here tomorrow. Of course, as we look at the 15-minute chart on the S&P 500, another gap on the open and a nice strong little run before flattening out throughout the rest of the day. Did see a little bit of profit taking towards the end, certainly not much by any means. And if you think about where it happened, right at that 2820, right at that kind of that top end, I think most of us think that 2820 is kind of the top end of this resistance zone on the S&P 500. So no huge surprise that there was some profit taking there, and it just wasn't going to happen here today. We are, though, knocking on the door. We are above our moving averages. It looks like it's going to try to push through this resistance, to me at least. We will see where it goes. You never want to assume resistance is going to be broken, of course, but we can definitely be prepared if that's the way that it wants to go. So should be a fun couple of days. Nice profits from a bullish perspective throughout the first 3 days of the week. As we get to the late week, do we want to break out at the end of the week, or do we want to take some profits and try again next week? That's kind of the story that I'm interested in right now. I don't really see any strong sell signals on a market level at this point in time, but I am absolutely going to respect that 2820 as the resistance level that it's proven to be. Right, I don't think that's going out on a limb or anything like that. Now, NASDAQ, we've kind of seen a couple of interesting things. NASDAQ, of course, technically closed above 7,200 yesterday, right, at 7,201 and change. Really strong carry through. As tech remains, pretty strong for the most part, in my opinion. Nice clean break. We did sell off of the highs. Unfortunately, didn't close that quite as big bodied green candle as I would have liked. What I think is going to be interesting, and hey Zach, good to see you, my friend. What I think is going to be interesting is the battle to 72, which I will now kind of operate under the assumption that 72 should be should at least try to act as a support level for us. We've got a little bit of a nice support zone on the NASDAQ and a nice resistance level on the S&P 500. One of them is going to have to win, not necessarily tomorrow, but probably one's going to win and one's going to lose. So I'm interested in that battle, assuming, we are able to hold 7,200, as we've kind of talked before. I mean, really not a lot until we get, closer to that 7,400 range. In my opinion, there's still lots of room in the NASDAQ to run to the upside. And like you said, Zach, it's going to definitely trickle down into that XLK in particular ETF, no doubt about it. They also had a pretty good showing here today. So I'll be kind of watching 7,200 kind of as the first level of support. If it breaks that, am I bearish? No, I don't think I would say that, at least not the way it's built today. A little bit of a higher pullback. Really, I don't think you can make a strong bearish argument until we break this swing low, which is quite a ways away. Over in the Dow and the Russell, a little bit weaker. Both of them kind of ran right up into that 20-period moving average. And that's kind of where they've called it a day. And we've seen this developing really throughout the whole week, that the S&P and the NASDAQ have been showing more strength than the Dow and the Russell. On the Dow, I think, right or wrong, a lot of us kind of attribute it to, in large part, Boeing. And I think there's at least some validity to that. But regardless of the reasons, we weren't really able to, kind of get that nice signal, that I think we would like to see in the Dow Jones. Do I think this 20-day moving average is an impenetrable wall? Am I as afraid of it as I am 2820 on the S&P? Absolutely not. But it is something. And of course, that 20-period moving average can act as a support, or in this case, resistance catalyst. At least on the intraday, it did here today. We'll have to kind of watch this one, see if it kind of gets drug up with the other markets as we move forward. I still think, much like yesterday and the day before, that NASDAQ and S&P are far better looking charts. Of course, the S&P now has to break 2820. If you made me choose one today, I'd rather buy the Dow because I don't have to break that major level of resistance. So keep an eye on that. If we can push through that, I think that could probably get, well, it would at least get me more comfortable. And I imagine, while I don't speak for the entire market, I imagine there are other traders out there that would feel a lot more comfortable if we got back on the top end of that 20-day moving average. I know I certainly would. And same real situation going on over in the Russell. Working into that 20 here today, using that as our intraday resistance, coming off of the high, still closing, positive, creating a higher high and a higher low. So still some pretty decent momentum overall. Just a couple of challenges, little challenges within the Dow and the Russell, in my opinion. The big one is the S&P. And I think probably most traders would agree with that. Certainly, probably not all, but I think that's probably the big one in my opinion. So that's where we find ourselves overall in our indexes. Again, for the most part, it was kind of strong day across the board, as we've seen a lot of that this week, right? A little bit more of the same. Now, over in materials, we ran right up and we very briefly tried to break resistance, and we weren't able to hold that. We certainly, in my estimation at least, closing back below that old resistance level at approximately $56, but we did close above the 200. So I'm going to call that a little bit of a mental victory. I don't think I can call it a break yet. By my standards at least, but we are continuing to see nice momentum. Again, we did come off of the highs in the material sector quite a bit. We kind of ran up and maybe a little percentage-wise deeper pullback than maybe we did on the broad market. Nothing really to generate, in my opinion, sell signals. But we've just seen this price, right? Much like the S&P, there's a lot of history at 56. I still like it to try to break it, and I still really do like a break to work us closer into the mid 57s, but it's got to break it first, right? We're definitely challenging resistance in the material sector. We challenged yesterday, weren't able to break. Today we were able to break on the intraday, weren't able to hold. Tomorrow we're going to break and be able to hold. I guess we will have to see where that one goes. But keep an eye on the price action in that 56 range. You guys don't need me to tell you that. I know that, but I'll say it anyway. We were able to continue our upward march in the energy sector after getting back above 65 here yesterday. Finally here today, closing above all of those short-term moving averages. Obviously, we still have the 200 a ways away from us. Not a lot has changed, in my opinion. This is just going to be one of those areas that a break of 67 is very appealing. Ideally, if that's going to happen, I'd rather it happen at this point in time next week than tomorrow or Friday. I have no say in the matter, so we will see. I expect 67 to be a level of resistance that will be a little bit of a challenge. I think that's a fair thing to expect just based off of the recent price action at $67. I'm going to just kind of like we were before. I'm just kind of calling this a fake out at this point in time. If we do break above 67, I'll call that a bullish signal, and I will at least consider it a tradable bullish signal as well. Right now, if it breaks below 65, well, probably not going to go bearish just yet if it decides to break to that side. We did have a little bit of a fake out. Not sure if it was deserved or not. We will have to wait and see. But I think short-term 65 should act as a little bit of a support zone as we kind of find ourselves back into this old trading range. We'll see where we want to go. Crude was able to close above 58 today, so maybe there is a little. For the most part, many of these charts, we talked a little bit about it yesterday, many of those energy charts just aren't quite there yet. And good afternoon, Melissa. Great to see you, and I hope you are doing well. At least they're not there yet for me. Exxon is trying to break. I think you could make an argument. Chevron is also very, very similar, but then you kind of get into Chevron's or the CVXs, the ConocoPhillips, where we did have a nice bounce, but we still have some overhead. We still have some moving averages. So again, it's still, to me, much more comfortable to wait until we actually take out resistance. Those are going to probably, again, you don't know the future, but if we do break out on the energy ETF, I would imagine many of these individual components of that will be breaking these, pretty easy to see to my eyes, at least, levels of resistance. I like things that kind of jump out at you, right? And Oxy's probably my favorite from a resistance point of view today, at least. So I still think, for me at least, it's above 67. If we, I don't speak for everybody. If we are here, I certainly, I could understand the argument. I just wasn't behind it. Keep an eye on 67, obviously, as a potential, at least short-term level of resistance. I don't need you, I know you guys. I don't need to tell you these things, but I always want to tell myself them. So over in industrials, again, just kind of more of the same. Maybe lost a little bit of luster with the Boeing news. And while Boeing, certainly wasn't bad here today, certainly wasn't good either, I still believe that as long as we hold our support level, we do have a very good shot of working back towards testing $77. I will want to keep an eye on that 20, much like the Russell and the Dow Jones. Am I terrified of it? No, but I've seen it act as a catalyst for resistance before, and I'm sure I'll see it again. Maybe not this time, but we'll be keeping an eye on out for that over there. But again, a little bit more of the same, I think, for the most part in the industrial sector. And good afternoon, Shami. Good to see you. Hope you are doing well. Tech was probably the exciting one here today. Of course, the NASDAQ breaking out, whether you were aggressively calling it yesterday or calling it here today, definitely followed suit in the technology sector. This is just a very interesting place to me. We have some really, interesting things. You've got Apple that still has a little bit of room, beyond it into its 200-day moving average. We are kind of fighting at this old gap point, this old swing, and that's turned out to be a little bit of a level of resistance for it, maybe more than some traders thought. I don't necessarily think it's a brick wall. We are making higher highs and higher lows. We have kind of got caught up in a little intraday resistance there in that 183 range. Probably, would like to see it move. But you have some things like Microsoft that have worked all the way up to the high and are kind of knocking on the door of at least a potential breakout. Of course, Visa, while it did come off of its highs pretty nicely today, built higher highs and higher lows. Still, overall, I think that looks like a pretty bullish chart. Intel breaking past some resistance, not a lot of overhead on it until we get into the 56 or so range. At least not in my opinion. There's not a ton there. Cisco has just been a juggernaut, as you guys know. MA, another one that broke out. You have Oracle, who do have earnings coming up here, but they're kind of sitting right on the top of a major breakout as well. So some of these big components of this tech ETF, to me at least, are looking very appealing. Either they've already broke like Oracle, or a lot of momentum into resistance like a Microsoft. I think that is a very appealing area. As I've said several times, probably my favorite area right now, if I had to pick one. Over in the staples, we tried, and I don't know, probably an hour and a half, 2 hours ago, I thought maybe we're going to have the conversation as they broke out here today. What do we do about it? I think maybe very aggressively speaking, you could say that they did break that resistance level. Now, I wouldn't say that. Certainly, with the way the price action developed, coming way off of those highs on the day. Now, was that a market thing or was it a staples thing? I guess we're going to have to wait and see. But either way, I'm not sold that this is broke just yet. But a lot more momentum into this resistance level than we've seen really for a long time, really since we tested it, right? Really, the last time we had some pretty good momentum was way back in mid-February, I would say, on the staple sector. I will maintain that a clean break is a bullish signal, and I do believe that. I just don't believe that we got it yet. I could understand maybe aggressively saying that, yeah, you know what, but you're a wimp, Frank. I would understand that. But I think I need a little bit more of a solid close before I'm ready to get on board overall in the staple sector. But you do have to like the movement and at least the effort to try to push through that resistance here today. Shows that, you know, maybe folks are finally coming around to maybe being interested within the sector. But for me, it's probably going to be about 55 before I'm really willing to say, yeah, okay. So don't really love this sector still, but I do, I can't appreciate the price action that we saw over there. Over in utilities, just another day. I mean, this is just what 2019 in the utility sector looks like. It just goes up. It once in a while will have a 2-day pullback, and then it goes up some more. I believe there were 19. I think there were actually 19 S&P 500 utility stocks that hit new 52-week highs today. And as many of you know, those are not just 52-week highs for a lot of those companies. Probably, I would say even the majority of those companies, they're all-time highs. So it just continues to show a lot of strength as we just keep marching up the chart. I mean, it does appear to be extended to our naked eye, but that doesn't mean it has to pull back, right? By any means. Does that mean that? Obviously, a pullback into that 57.25 range could be really interesting, but we're going to have to get one down day before we can even speculate about that being a possibility, right? Healthcare continuing to march up as well, still very divided overall. If you look at the healthcare sector and let's take a closer peek at that. But before we do, we did push through that old support zone kind of back into the range, kind of like energy, where we broke the support level, maybe not a stronger level of support. I don't think I would argue that, but same type of philosophy, broke support, tested it and pushed through it. Looks like it may want to be back in the range, but we are, as you guys know, dealing with a lot of different looks in the healthcare sector. No doubt you've got, Amgens that are now working into some falling moving averages. You've got CVS that's going to look a lot like a bearish retracement to a lot of traders. Many of those, the CIs and the UNHs are going to kind of look very similar to that. But again, you still have, nice things like Merck, and nice things like ABT and Johnson & Johnson even coming up, into some resistance levels. So again, while we're seeing some strength and overall, that appears that that's the swing that we're in. To me, what that means is look to be trading into the upward moving healthcare stocks. When we start to see some movement to the downside, then start to be looking to trade into those, things that have broke support, the UNHs and CVSs and things like that. I don't think we have any reason to believe that that has to happen tomorrow based off of the price action and where we find ourselves on the ETF. Really not a lot of resistance until we get into that 93 range. Definitely want to keep an eye out at that price point, I think, with all of the history that we have there. We'll see if we hold this old level of resistance and support now as our new level of support. But it looks like, at least for the most part, the bulls kind of have a little bit of a short-term hold on the sector as a whole, but we are not hold too many holds there. We are going to be running into some potential resistance zones that is going to challenge at least a few of the components within this ETF. Over in discretionary, took a pretty good run early, but was not able to even quite make it to that 112. I still think that from an overall perspective, the break of the 112 is worth waiting for versus trying to anticipate the break happening, especially with the way kind of things have developed. We've got the NASDAQ breaking out, we've got the S&P knocking on the door. If the S&P breaks out, good chance that the discretionary sector is going to come with it, taking out that 112 as well, at least trying to do that. So I still think for me, it's the weight above 112. We can try to trade in this range, and I do think you could make a strong case that the bulls are very much in charge. We are making higher highs and higher lows. on the intraday. But, we did come off of those highs pretty steep, a little bit more selling than maybe we saw, overall in the market off of the highs. For me, not a whole lot's changed. The 112 break is a very solid signal, in my opinion, and it's worth waiting for instead of trying to anticipate that this is the time that it is going to happen, because that's certainly not a given that it's going to be able to break through that, in my opinion. Real estate, just like utilities, another great day in the real estate sector. Not a whole lot to say. We're at a new all-time high, above everything. The bulls are in firm control. Maybe we'd like to see a little bit of a pullback if we're not in the sector, but no reason to think that that has to happen tomorrow. No technical reasons in my head to believe that this is the end of the road. Just the bulls are in very, very firm control of the, both the utility and the real estate sector. And part of it might be simply, I think what it tells me, Zach, more than anything, is these guys didn't have to deal. They've already dealt with those levels of resistance that we're seeing broadly in the market or on a more ETF level. Whether it's 67 for you or not, there is resistance that we have to contend with in energy. Whether you think 112 is a big deal or not in discretionary, it does have some history there. So to me, what this really tells me more than anything, at least from a shorter term perspective, is the things that didn't have the same type of challenges were just more appealing. Who wants to buy at resistance? And again, I can only speak and think for myself, but why would anybody buy the S&P right where it's at right now? If it doesn't break, you can't win. I would never do that. And if anyone said they did, I would say, well, I don't like what you did there. And so for me, that's really what I think about it, is these have been, just from a momentum point of view, not specifically from an, trading point of view, but they just haven't had to deal with their resistance. They broke their resistance. They have, and this is why I like things that are, showing a lot of strength. I'm not much of the bottom, I don't pick things up off the bottom or try to guess the tops. I like to trade into it. So, for me at least, that's where my head is with it, Zach. Whether I'm right or wrong, I guess we may never know. But I think for me, a lot of it comes down to we'd already broken out in these areas. These areas had already taken out these resistance zones. We didn't have different levels above us to have to concern us. And while any given one of us are going to feel differently about all sorts of different levels of resistance, we're all going to see them, right? They're all going to impact us and potentially impact our decision making. With real estate and utilities, I mean, basically, our question is, do we just stick around and enjoy the trend while it lasts? This is a little easier one than to try to debate, well, we're at major resistance. Should we lock in profit? So that's at least how I'm thinking about it. That's always how I think about it, though, to be quite honest with you, Zach. I really try to focus primarily just on the price action side of things that are in the way, things that are holding me up. I've learned for myself a long time ago that I can get really wrapped up in trying to apply meaning and beyond what's healthy, for me at least, to the newses and the whys, especially short-term price appreciation. So I try to just really lock myself in as tiny of a bubble as I can. I can't stay in a bubble all the time. I would if I could, but I really try to lock myself in the price action bubble as much as humanly possible when I'm thinking short-term. At least for me, that works a lot better. I can get really caught up in trying to attribute a why to everything if I'm not careful. So over in the communication services, I don't know if you want to call Facebook a break or not. Just we see this a lot, and I think we saw it here today. Google was not able to break. Of course, we know we're knocking on the door of that 12. That's a big round number. There is a lot of significant history, maybe not a lot, but there is very significant history at that 1200 on Google, and it's a big round number to boot. Facebook, I think technically speaking, you could argue that it closed. I don't think it's a confirmed break. I think you could argue, though, that it closed. I think a confirmed break could be argued. Let's go to 30. Will that work? Yeah, I think that would work. I think if we can take out this little top that we've established here over the course of this, while we've been trying to break out, I think you could call that a little bit of confirmation. I don't think we had it just yet. So again, within this sector, I'm always really mindful of how those two huge components of the sector are performing, just to not get too excited, because this is a nice solid break. Yeah, I'm with you, Zach. I'm not sold on it yet. I wouldn't bet against it, I guess is probably the best way to put it. I'm not running out to make a bunch of bear call spreads or anything like that, but I'm not quite sold on it either. There's just, I mean, we looked at it yesterday and a lot of it's more of the same today. Things are showing good momentum, but we do have a Verizon having to deal with some resistance. Facebook and Google both dealing with some resistance. Disney, quite a bit of overhead resistance on it. So we just have lots of the components. Netflix, well, we don't even need to talk about how hard of a time Netflix has had breaking through what, at the time didn't seem like a lot of resistance. So there's just overhead, and that concerns me as well, at least in the short term. I'm just going to kind of keep an eye on the individual components. If Facebook breaks, those highs and I want to play it, I'd be perfectly happy doing it. So that's kind of how I'll be looking at it myself is, hey, we broke out in the sector. I don't think that makes the sector ETF a great trading vehicle as I take a closer look at the components here. But if I wanted to trade a Netflix breakout when it breaks out hypothetically tomorrow, or Facebook or Google or whoever it might be, I would look at this overall as a positive for that breakout. So that's kind of how I will be treating this. But I am with you on that, Zach. And I've been that way really since this became a thing. And a lot of it is because I've been following so many of these other sector ETFs for so long. I feel like I've got a really good handle on them. Whether I do or not, I feel like I do. And these guys are still just kind of figuring them out, trying to figure out why are these the stocks that are in this area? And what I've just seen over the course of the life of this ETF is that you can see a lot of, some things looking really strong, some things looking really weak, and not maybe directly correlated like some of the other areas, which just makes it a little easier for my brain, at least, to comprehend them. So, just a little bit more of the same. Really, I think the big storyline at the end of the week is going to be the S&P challenging that major level of resistance. The NASDAQ cannot hold above 7,200 here. I think those are probably the two big ones in my mind from a price action perspective. It's going to be interesting. We've got a tough task to break that resistance in the S&P, but we've got some momentum. We already took it out in the NASDAQ. It has a little bit of support maybe to prop it up if it does pull back. And it's going to be an interesting battle, I believe, going into the later part of the week. Of course, over in the volatility index, again, traders are kind of just feeling like, we had a little bit of a scare because we hadn't seen a pullback forever, but we're back to business as usual, right? Everybody wanted the pullback, but when they got it, they were scared. Oh, is this the top? So we do that. People are weird, and I say that endearingly. So, and I say that as guilty as anybody, probably more so. Over in the dollar, we did have that nice big doji start to develop, but established no momentum right out of the gates here today, really selling back down into that 97.50 area. I'll be keeping an eye on this 50 as potentially a support catalyst at this point in time. I mean, you could make a case that, if we zoom this in like this, we are making those higher highs and higher lows. So I still think you could make the case that a pullback could be in play going into later in the week or early next week, as long as we hold that support level. I'm still neutral. I'm still waiting for a break either way. You guys know me. So that doesn't really change my opinion one way or the other. But I know that's just me. Let's see if we can establish some support. We have this swing low, which is now going to line up almost perfectly with that 200-day moving average as well. So I don't think there's any, short term. I think, you look at, the price action. The bears are in control on the very short term. I don't think it takes, much to sell anybody on that. But I still think for the most part, we're just trading within this range. And I'm not a huge fan of trading within ranges. And so I'll just continue to wait until it eventually does break one way or the other. Over in gold, we were able to continue that momentum, closing above 13 yesterday, breaking back and closing above that 50 here today. I think we were looking at the 4-hourly chart, and this is where we were when we spoke yesterday. We pushed out of that. Of course, the 4-hour chart just kind of zooms in a little bit, gives you a little, maybe a little more perspective, and sometimes that can be helpful for me at least. Showing quite a bit of strength, getting back through that 1300. I think at this point in time, you go if you did have a bearish sentiment on it, and I think most of us kind of went more neutral than bearish on that support break. But I think breaking back above 13, closing above that 13 out for 2 days in a row, closing above the 50, does this make a great entry point? I think you could make an argument that it doesn't. I don't think it makes a great entry point personally. But if we, do get a little bit of a consolidation period, I could definitely see myself changing my mind. But I do believe that whatever we're doing or not doing, I think getting back above that old resistance, that big round 1300, that 50-day moving average, I do think that those are positive things if you're looking at it from a bullish point of view. From a support level point of view, if nothing else, I think this really locked in that 1280 as a major level of support, at least a short to intermediate level of support. If this breaks, and I don't anticipate it to, at least not tomorrow, that would probably be pretty ugly from a charting perspective. We're a long ways away until we potentially test that. But I do think with what we've seen in the development of this move off of that 1280 area after using it as support before, I think we can call that a pretty important level of support for gold. Doesn't mean a lot today, but that doesn't mean it can't be in play a week from now, right? So yeah, overall, I am kind of there too. I don't think it's a great trading, at least from a swing trading perspective, a great swing setup right now. But we very well could get something. Maybe we get into, run into some profit taking, get at the 20 there, pull back and test 13, consolidate for a few days. And then next Wednesday, we might be having a much different conversation about the chart, right? We'll have to see where we go. Silver tried to break back above that 1550 today, just was not happening, working right back into that 20-day moving average. And this is the problem. Well, I think with gold, a lot of it's more of a preference thing, for me at least. I think for silver, it's just, this is a messy chart right now, and I wouldn't want to, be involved from a bullish point of view. Everything is just, there's always another little challenge to deal with, whether it's the 20 or the 50, still closing at the 50, below 1550, little bit of a gravestone doji type of a candle. So, I mean, if you think about how this price action developed, I mean, we hit that high and then we really did kind of sell off a little bit, maybe not taking out charts or trends on the intraday, but it looks like we're kind of testing that old breakout point on that 15-minute chart pretty nicely. Just a lot of overhead. If I want to trade into the metals, to me, just like yesterday, that gold chart is much more appealing if I had to pick one versus the other. It's got to, at the very least, it has to break 1550, and close above 1550